What's going on, everybody? Welcome to the Dips to Rips podcast. It is Charles Moon here with the legendary Howard Greenberg. How's it going, my man, Howard?
I'm doing pretty well, man. Kind of sick of trading sideways all day today. It was a boring day in the room.
There's a bit of a difference between your market and our market. This market is just nonstop up. And by the way, I think 2 or 3 episodes ago, so that means at least 3 to 4 weeks ago, we talked about how the markets have been looking bullish for both crypto and equities. And here we are. I think the Qs are now over 20% off the lows. I think Bitcoin is 16 to 17% off the lows in the last month. Am I wrong about that?
A low would have been 1760, so it's up about 5,000. So no, about 35%.
Maths. Oh, so I undercut. Sorry.
Yeah, you forgot how low we went.
Maths.
You hit 1765.
Yeah. So, well, we've been talking about this rebound, and here we are. Your market is fairly tepid. You know, if we look at the SPY today, I'm just gonna pull it up on my end, but I'm not gonna share the chart.
Oh, I gotta make sure you can share here, buddy.
All good. Just very briefly.
You're good. You can.
SPY average volume is at around 74 million per day over the last 20 days. Today we traded 67 million and decided to rise up 1.5%. So that tells me there's no sellers that are trying to step in, and the ones that do are just getting run over, that it is very long biased. And at this point, there are pretty nice gaps to the upside that we're going to get filled here in the near term. So, you know, in respect to that, you know, there's really no major news to speak of outside of the Pelosi thing. You know, Pelosi basically putting a whole country in danger by visiting, you know, all those hollow threats, although very scary, turned out to be just that, just a lot of verbal carnage, and the U.S. basically said,
yes and no, but understand that they basically put an embargo around Taiwan over the last 24 hours, and Taiwan ships in its coal every day. Their energy supply is replenished every day. I never understood, never knew that. So it was a pretty big deal to them. You know, here in the U.S., we might not have felt much, but you know, if you're living in Taiwan, you probably were a little scared the other day.
Well, there was certainly a lot. There was 2 groups of protesters, one to protest kind of China's actions and one to protest that Pelosi was there. At some point today as well, China flew 27 military planes into the actual air defense zone during the Pelosi visit. And last night, there were a lot of barbs being thrown back where Taiwan said, well, if you're going to do that, violate like that, we're going to respond in kind. And that's the problem, is this kind of, you know, chest puffing and media sensationalism. But this isn't really that out of the ordinary. It's not like we haven't visited Taiwan before. It just seems to be a really big deal at this point. And I don't know if it's hyped up by the media. But let's talk about, on your end, the big news that hit last night. Solana. So lots of, you have to clear this up, because there's a lot of things that were being thrown out there, right? You basically cleared it up with me, but I want to make sure people know the news, because there were talks about exploits in the actual crypto itself that was making it vulnerable in any wallet, right? But that's not true.
Right. It looks like it. So Solana as a protocol did not get hacked. What happened, though, which is very concerning, is one of these, you know, web wallets that they have, Solr. Right. Basically, they at some point transmit. First of all, they were holding their customers' private keys, which they shouldn't be doing anyways, because it's a self-custodial web wallet, and they kept it in plain text, not encrypted like it should have been. And someone got access supposedly to that. So keep in mind, you know, we've seen other exploits, you know, the Bored Ape Yacht Club being the big one on Ethereum, you know, and things like that. And usually what it is a user mistake, unfortunately. And what they do is they trick you into approving a transaction that you didn't really mean to approve. They hide it sort of in the background, and then they later execute on that. That wasn't the case on this. A lot of these people literally just moved their Solana to a self-custodial wallet, thinking it was safer because what we just had those exchanges crash, Voyager, Celsius, all lockup stuff, not to mention the ones overseas. So everyone's telling, new users, make sure you self-custody your coins, make sure you have it on your own wallet. And people who did that are the ones that just lost that. And it's 8,000 wallets, over 8,000 wallets.
Right.
I just pointed out to Big Beat, our boy over at money.net, who bought a shitload of Sol yesterday. So he's mad and saying it's not a big deal. I'm like, it's a big deal. You just lost 8,000 users. They'll never use Solana again. If you steal from me, I'm not going back into it. And these were most likely users, again, that were the heavy DeFi users also. So these are the people that lost. But yeah, it wasn't the protocol. I've been talking about it. One of the things that, we've seen both sides of this, and I would like to get into it a little bit more here, is, the slow and steady, the turtle pace, and the rush to get things to market. And we've seen 3 different projects go under 3 different ways. Cardano has taken a lot of crap over the years because they're still what's considered vaporware. There isn't a lot of use case for the blockchain because they move so slow in the way they do things. Right. They've also never had a hack. They've also never had any kind of hiccups that just took down the network, anything like that. Then you have Ethereum, and Ethereum is going through getting ready for the merge that we've talked a lot about. And what we've seen is they're using their test nets. So instead of just rolling this thing out and saying, let's see what happens, they have these environments where they go and they test it. They beta test it. And they've done it, this will be like the 9th time they do it when they do the Gorelli this week. That is the right way to proceed. I agree. And then you have Solana, which will tell you that it's still a beta product, but it's a beta product with billions of dollars of value locked up on the chain. That's probably not a good idea then, right? I mean, that makes me start to think about Solana and say, whoa, wait a second. So you call yourself a beta test still, but you are willingly, you are the holders of millions and almost billions of dollars at one time worth of value on your chain. That's pretty irresponsible in my opinion. So I've definitely had some problems with it.
What was crazy is because there was so much like news being thrown out and shared, and it was really from like TikTok and Twitter where I heard a lot of the noise. But people were starting to say, "Your wallets aren't safe. Throw it on an exchange." And you brought that up, and the first thing I heard when I saw that was what, and in our chat, you brought that up and just laughed and said, shake my head. And so this is where we have to say to people, you got to be very careful about where you're sourcing your information. Absolutely. I fall into that same line as well, but that's also why, my man, I always follow up with you, right?
Yeah, double check. You bring things to my attention a lot of times, and then I have to go research to figure out what actually is going on out there. Crypto Twitter is both a great help, but also a little scary because people who don't, who purport to be experts might not be experts.
Exactly.
So you got to really make sure that the folks that you're following and listening to, that you're vetting their info. And there are really good people out there. It's not hard to find. I won't do it today, but I'll share. I leave my TweetDeck crypto and NFT lists public, so that anybody that wants to follow reputable people can just copy and paste out of my TweetDeck. So I will share that next week with everybody. I'll put myself a note on that.
Hey, you're my reputable source, brother.
What's that?
You're my reputable source, brother.
I appreciate that, but I also don't tweet that much, as you know. I'm not a social media guy.
You know what?
I follow it. I'm not a big fan of doing it.
The one thing I always talk about in terms of my respect is your work ethic and your due diligence. And, it's obviously you care, but it's obviously that you're interested. And whether it's for, our students or it's for your own self-fulfillment, regardless, it's not that I'm lazy. It's just sometimes I don't know or trust what I'm reading. And so I always have you to break it down, and, in respects to being a teacher.
Yeah, same thing with you. As you know, I was asking you last night about stuff. I always check with you and I will say that for all the guys at Prosper, the same way, I brought up a couple of weeks ago that Riot was one of my favorite, mining companies to look at. And I went to one of our option guys, Scott, our boss.
Our boss.
Said,
the guy
hey,
that was on
Scott.
the episode 2 weeks ago.
Yeah. I said, hey, I'm thinking about doing a call spread. And he immediately was like, nope. It took him like 3 seconds. He's like, nope, you need to do this instead. You're going to sell one, buy two. And that way you have unlimited upside. And now I'm up over 400% on that option play. But that's, that's why it's great. The group that we do have at Prosper, Mike is always willing. Again, same thing. If I ask him to look at an option, he's usually the guy I go to when I need to get out of a bad play I've made. Hey, Mike, I did this. What would be the best way to get out of this with, saving a little bit of money? And he's great at, showing me how to roll things over or, how to do that. Yeah. And then, like I said, for regular stocks, I go right to you. You're the man. But yeah, it is important to make sure you know your sources, make sure that they're accurate, and you double check and everything.
Always.
What there is in crypto, better than anywhere else probably, is every single protocol has a Discord channel.
That's one thing that I've also noticed is these Discord, like, because I'm in the helium one, I'm in the helium one because I'm all about helium, but I'm in a few of these Discords, and they're extremely well-run environments. And, that's where I'll get turned off by certain projects when I see that Discord is in absolute disarray. You got to have, obviously, like, the moderators is such a undervalued position for these Discords, because those are the guys that have to have the ins and outs and knowledge of what the hell's going on.
And the patience.
Well, patience is the big thing, right? Yeah. But in regards to kind of handling a massive group, some of these Discords are hundreds of thousands of people with, multiple channels lined up. It's certainly important that, not only do they know how to navigate, which is extremely important, it's their business, but in terms of delegation, it's putting the right people in the right spots, just like with any major company. And your success, it really does start from the top, but it also has to leak all the way to the bottom, because as soon as there's a weak chain, it all starts breaking down. So,
and like I said, I make decisions on projects based on their Discord channels. Are there developers on there that are interacting? So if I have a question and I ask something, do I get an answer quickly and, from somebody that I trust knows what they're talking about, like in that Solana case? So that is the other thing that I will point out, is always make sure to double check on the official Twitter handle of the platform or the Discord channel. Enough about the bad parts of crypto. How about the QQQs, baby? What do you got going on this week?
So, if we're going to look at the broad markets and say what is in store for us. So I'm going to share my screen here. Okay. All right. So when we look at, hopefully you can see my chart here, Howard.
Absolutely.
Okay. So I got the SPY up here, and the SPY is the first focal point because, number one, we got to really push through this key resistance level, right? This was the shelf that basically we rolled and went to the absolute lows of the year. And this was after a pretty nice fire up. So that's right around this 417 price. We're looking for that breakout. And that leads to this major kind of crossroads at around 429. There's a major gap fill. It's a smaller one, but it's a gap fill, but it ties in directly with the 200 simple moving average. When we look at the Qs, which is the major driver of this bust right now, there's a small gap fill, same relative idea, but there's a little bit of spacing to that 200 simple moving average. And so I'm wondering if that's what the market is waiting on, because we've rallied like this before. We've touched that 200, and then we had a horrible spill. We had a nice little bounce back, and then we ripped it down to the lows again, and we've been basically bouncing back. And so it looks like that's the designated run up here. We had lower highs in the past 2 days. We kind of hit this little bull flag, and we broke it today in just instant range extension. I believe that run up was in the tune from like 318 up to 323. For those that don't know, a 5-point move in the NASDAQ, that it basically equates to around a 200-point move. I'm sorry, a 5-point move in the Qs relates to around a 200-point move in the comp. Today, the NASDAQ finished up 319 points or 2.59%. So, you know, one of the things that I really wanted to do in this podcast that, you know, Howard and I agreed upon yesterday was that we want to give you some trade ideas. It doesn't necessarily have to be immediate, right? We're talking about forward-thinking ideas and what possibilities and outcomes can be. So I think I want to kind of start that off here, Howard. Let me kind of go through my 3, and then I'll let you share your 3.
Absolutely.
But with this up market, right? I was like, well, there's some great short ideas, but I don't want to talk about those yet. Have I been short? Yes. I'll tell you right now, I'm currently short Netflix. I'm not doing great, but I'm not down a lot. I'm only down about $1 right now. Dollar, actually, yeah, I'm down less than $1. And relatively speaking, you could see where our ceiling is. And this is that resistance zone that I've highlighted. And so basically I took a short off of that level and I'm looking for it to curl over. But obviously with this bullish market, Netflix has been holding steady. The thing is here, Netflix has yet to break down, right? But they haven't blown up to the upside. Amazon exploded today, Google exploded, Apple, Microsoft, Meta all made huge moves. Look at what PayPal was up, SQ was up. You know, we saw these growth names all exploding. You know, I can't tell you, let me see. Coin was up 20%, Moderna 16%, UPST 14%. I mean, those are the good old days. But yet, Netflix only up 2.4%, which is a lot, but still couldn't break through resistance. So until it breaches that level, I'm going to hold on because at some point this market is going to roll here. And when it does,
it's that spot a couple of times. I mean, I'm looking at your chart here. You got 1, 2, 3, 4. This is the 5th attempt for it to get through.
Yeah, and this is a
that's always, I mean,
resistance.
I'm with you. That would be all day short.
Yeah, and I mean, if we look at it in this respect, right, with the bigger picture here, look at how it's just getting shut down. And this, in all regards, I've widely pointed to my clients in my trading room that 230 marker is really important. And we bricked at 230 and really haven't been able to follow through since. So if Netflix ends up losing 220, we'll actually start rolling here. But in the case that this market does explode, right, and Netflix doesn't work out, one of the names on my radar is Shopify. Since their horrible and horrific earnings, you know what they've done is made a significant move up. Well, they closed above a key price level. You can see I've already outlined that it's been in the sideways congestion. They've actually triple tapped those lows here. But in a sense, it's like 4 different tests of this 29 price. And every single time it's been a rebound to the degree of somewhere around $40. Well, this is the highest that we've been in since somewhere around late April. And what's really stand out here, this is where I want to point it out, is that there's a major gap to fill. We keep forgetting that Shopify is truly what's known as a darling pumper, right? A lot of people have made incredible money off Shopify. They've done their split here, and now we're seeing it come back to life. And so if Shopify really gets bullish, there's a little slowdown point here at 44.58. But I think the overall progression idea is to 48.55. So really dynamically, you know, we're doing this on Wednesday, April 3rd. The video is probably going to be out within the 5th or by the 5th.
Yeah,
I want to see if we could stay above 40. 40 is a major threshold level, and I'll point out why. So if you look at all these old highs here, they're all tied to this $40 price, okay? That's a pretty steady line. And there's your $40 price. And so in all respect, this is known as our resistance. The most bullish thing that we could see is that resistance turning into immediate support. So theoretically, what I would love to see is this pullback, Howard, to 40, and then just an absolute launch. Like just use that as a trampoline and frickin' rip it to the moon. This is what when we say dips to rips, this is exactly one of the things that we want to see. This pullback, hold this price level, and just get absolutely bullish. Next up, let's talk about the memes, because the memes are coming to life. GME is becoming a quick favorite. In fact, I actually tried to call a signal today. Well, I didn't try. I did call a signal today. I never got filled. I sent this thing out 10 minutes after the market opened. It never came back. It never got to my price level. So I was looking to buy in the 36s. It's basically dipped under 37 for a brief second. Then AMC popped up and GME started ripping. So what am I looking at here? So the overall progression since this major spike low has been really bullish, right? And we really started finding a big squeeze here at the 200 simple moving average, which is this teal blue line. So we broke above and then we failed to find price discovery and move back. What was really important here is that it found critical support where it launched from previously, which is the 100 simple moving average. And look at on this hourly chart to the right at how strong this curl is. Wow. So ultimately, what I'm looking at now going forward is right here, the 200-day moving average, which is pretty much aligned with that 35 half to $36 range. If GME continues to hold this price, they're going to apply pressure on this $40 mark, okay, right here. Key level to watch. Price acceptance above 40 important, okay? So I'm just going to type that out. This will probably be a lot easier if I just click and drag it forward, right? Yeah, there you go. So that's going to be an extremely important price range because once we get above that level, then the skies start to open up once again. That leads to an upside trajectory in the range of around 48 to 50 bucks. Now, expectations have to be tempered here, right? The days that GME is going to make 90-point moves in a day and a half, you can't expect that with the quad splitting, basically, right? That dividend split. So in my opinion, this is an important situation because once it gets above 40 and holds 40, the skies open up. We're talking about additional upwards of 20 to 25% here in the near term. And I really think that GME has that ability to make that type of move. Maybe not a $90 move, but a $10 move. Not
I mean, the top of your price channel that I'm looking at there is right at that 50, right?
Yeah, that's a very important price level we need to break and run. So GME is on watch, immediately holding above that 35, 36 range, breaking and holding above that 40. Last but not least, my man, it is PayPal. Now, PayPal had earnings.
A lot of hype, man. A lot of hype. I see Elliott, management jumped way in, right?
Oh, yeah. Oh, yeah.
Now, lots of stuff on PayPal, man.
Well, the buyback is the biggest thing. It's really important because now all of a sudden these companies are throwing out huge buybacks. Airbnb had a massive one as well. But there was a gap to fill here on PayPal. It sounds crazy, but it is a gap. It is a closing price of April 19th at 103.66. Today's high didn't get all the way up there. We got up to that almost near that 103 price, and PayPal basically went down since. So I'm actually looking for an extended pullback to PayPal. Which price level am I looking at? Well, they always say gaps tend to be filled. So I'm actually looking for it to revert back to 90 and 89. And if it holds that level, I'm looking to hit a reversal hammer buy to the upside. And guess what? I think my upside is going to be from 90 to 103. If we break 103, there's also a secondary gap fill, which is right at the top of that shaded box.
Yeah.
That is going to be the closing price of April 12th at right around 108.25. And again, anything above that level is icing on the cake. That's when we could see it push towards that 120, 125. Now, in full disclosure, okay, and I do have to say this, when the market was at its ugliest, I did start accumulating and building out positions for the long term, okay? PayPal is one of those companies. Meta is another one as well. But that doesn't mean I'm going to sit here and not trade them. Totally separate accounts, totally different viewpoints. Again, one is something that I'm going to look at 5-10 years down the road and be happy with. The other is going to be extremely important in terms of timing in the short term, and that's what I'm looking at. These are all bull plays. If we're looking to fade right now, energy is what I've called, obviously, Netflix. If you folks are still watching on that Netflix idea and say Netflix continues to get shuttered, down at 228. That's an absolute trade idea here. Maybe you could stop out if it gets above 231, of course. But, you know, there's going to be a time where this market's going to get ugly again, right? We'll just have to wait and see if that's going to be the case. You know,
you think it will, though? I mean, you know, we've got till September, till the next Fed meeting. I mean, we'll get jobs reports this week. You know,
CPI is next week.
CPI, I think, will be pretty big.
Yeah, and so that's the case, right? What could send us down? I'll say it's one word. It's China. That's plain and simple. Maybe they took this really personal, right? Biden has not. I don't want to say he's been unrelenting, but you know, the one thing that him and Trump have in common is the pressure that they have applied to China. Now,
without a doubt, both of them. Yeah,
I mean, in all respect, Trump put on those trade tariffs, but it's Biden that continues to enforce them.
Yeah, so he hasn't rolled back any of them yet.
No, and he said 6 months ago that we'll reassess and decide on the tariffs, and we're probably going to ease up on tariffs. Well, China hasn't reacted in kind, so Biden's like, okay, well, tariffs are still on, and in fact, because of Trump, we have another tier to go up. We're only at level 1. We can get to level 2, and you don't want to see level 3. And it's true because China's economy, as much as people boast about how strong it is very, very fragile. It won't take much to break it.
Well, we saw. I mean, banks weren't allowing people to take money out.
Yeah, when we talk about their real estate bubble, you think it's bad in the United States, folks. Wait till
nothing. In China. Yeah, so I mean, they're in for and their economy. You know, they don't. I don't want to say it incorrectly, but you know, they're able to point much quicker to their government as the issue for their economy, you know, into one direct person being Z than we can to just Biden. You know, we have a 3-tier system, you know, that all gets involved and all screws it up.
Democracy.
yeah, but you know what I mean?
But the politicians work for us, Howard.
Well, yeah, you know, it's just a little different. But there, I mean, you know, again, I mean, you know, we've seen Bitcoin's volume pick up during Asian hours for the first time since, you know, a year and a half ago. We started to see buying, and it picked up last night, you know, especially. So, you know, that gives me the idea that they think there's some problems going on and that we could have more, you know, issues there. So
can it possibly be not China that's making those moves in Asia overnight, but it's North Korea?
They don't have the money. They don't have the cash to buy Bitcoin.
You really think that they don't have that cash? I mean, they've been
I do. They steal their crypto. They don't buy it. And that's, I mean, Lazarus Group.
Very much so.
I mean, I mean, Singapore definitely has parts to it. Taiwan has parts to it, but nothing competes to the money in mainland China that goes into crypto and, you know, especially Hong Kong. You know, crypto was built in Hong Kong. There is no doubt. So, you know, and we're seeing that start to pick back up for the first time in a long time. So I guess let me share some of my charts. Show you what I'm looking at.
Yeah, Howard, what are you looking at? What are you looking at here? What do you got for us, brother? Huh?
I got something for us. I went a little different than you. I figured everybody was going to want to talk a little bit about Bitcoin. So we're going to start there. Let me hide some of my MAs. They're not really needed for this picture. But one thing I want to point out is, you know, I sort of disagree with some of the pundits out there right now, and that I do think we've seen the worst when it comes to, you know, and the reason I'm saying that is, you know, since June 18th, we're seeing higher lows and higher highs on every climb, you know, and the numbers are here. You know, we bottomed out at 17,685. We made a run up to 21,850, fell back down to 18,750, back up to 22,685, down to 19, back up over 24, down to 20, and back up to 25.
I love that hold above 20, by the way.
Yeah, you know, yeah. And I mean, it was big getting above, and it was because it was big getting above that 2450 area that we had stalled out at for a couple of days. Finally got above it. So, you know, I'm looking at us for here in the short or midterm, I should say, as a look to a run up towards about 28. But what we're going to hit, as you can see, our drop was dramatic and it was quick. We went straight off a wall here at the beginning of June when Celsius and 3 arrows, all that was during this period here. So, we took it really hard. We're not going to build right back up to that range that we were trading at in June and May. But this is what I'm looking at is, 4 different times we've hit a higher low, 4 different times we've hit a higher high. I think we're going to continue with that. I do think reversal. I think that if the markets stay up the way that they're looking QQQ tomorrow, I think that crypto will follow. And I think our next run could take us up towards that 26,600 line. And then also the other thing is look at RSI. We've got a nice trend line forming on the bottom of our RSI too. So, and Bitcoin does its best work above 60. So when we usually see it rip, it's our RSI goes well above 60, over 70, and all, we go as high as 90. We don't mess around when you get FOMO.
You guys don't mess around.
FOMO kicks in. No, it's true. Well, because you're going to start. I mean, our problem that I've seen over these last 5 days and why we've dropped down is, again, spot volume just disappeared and we were at the hands of the option and future traders. So liquidations of perpetual futures were really deciding where the market went. And people got a little too bullish, a little too quick. We've seen open interest jump up to $30 billion again. That's a high level, means there's a lot of leverage in the market. So that leverage got flushed out over those 3 or 4 days. And now we're starting to rebuild again. So Bitcoin's one for me. Again, that's what I'm looking at there is as long as we keep higher lows and higher highs, I don't see a reversal down. I am buying the dips. Sir. Yeah, so that's Bitcoin. Ethereum, a little different the way that I'm looking at it. In Ethereum, I'm trying to get back into the trading range that we were in here between May and June. Again, you can see when Celsius 3 arrows fell, we went down, but we've nicely climbed our way back. I mean, we hit as low as 9 and change, 884 back here on, June 18th. We've climbed up. So basically almost, 90% up since its lows in June. And, what it really looks like to me is if we can break 1710, we're going to reestablish ourselves in that trading range. And that's what I'm looking for on Ethereum.
2000 makes a lot of sense as a target, right?
Yeah. Oh, yeah. Yeah. That tends to be it. And with the merge coming up, September 19th, we've got Gorelli's. Testnet is going to go live, I think, in about a week. And that's the final testnet for it to go through. And I think on that news, you're going to see us jump back into this trading range and up towards 20. As I've mentioned to you before the show, it is a sell the news type situation. As we get closer to the middle of September, I will be lowering my position on Ethereum and ready to buy on that dip. We always seem to sell the news, whether it was, Bitcoin's halvings, whether it was, the new rollout of smart contracts on Cardano, whatever it's been. Ethereum's at EIP 1559. We see a great amount of FOMO leading up to it, and then it's a sell, the event. So that's
what I'm slow, Howard, because I told you that I went long on 3 Ethereum at right around it was like 10, 11 when I went long. And I ended it because I dumped it at 12.
I know. I was surprised when you told me you got rid of it. I was a little angry with you.
Well, I bought back in for 1, and I'm still holding it right now.
Yep. Nah, I mean, that's the way. I was
just in it for a flip. I should have just held.
Yeah, I mean, you want to hold some for sure. At least a 25% rule. Hold 25% and trade the other 75. If that's what you want to do. And then lastly, I'm going to bring up Aave. And I'm bringing up Aave because Aave just had a very, significant change happen. Aave is a decentralized lending and borrowing platform, one of the 3 largest with MakerDAO and Curve when it comes to the 3 largest DeFi protocols basically out there. And what they've done is they just pushed through and voted to start a stable coin that's going to be done very similar to how make or die is. It's going to be an over collateralized stable coin. So not an algorithmic stable coin like UST, but an over collateralized one. And that's going to bring a lot of liquidity to the Aave protocol. And it gives them, and that's what network effect matters a lot when it comes to crypto and these platforms. And that's going to give Aave some network effects. And we're also set up in a nice ascending triangle setup, as I pointed out here. And as you know, when we normally break through those, it's pretty explosive moves to the upside. And I could see us, we're at 97. I see 115 as doable in a matter of days. So, a pretty big one. And it wouldn't surprise me to see us, challenge this 125 level, so that's a pretty big move, 25%. That I'm seeing on Aave. Now, again, we have to break out above, 101 to see that, confirmation come out. But if it does, that to me is go time.
I like it. I really do.
Yeah. I mean, they're not overly complex stuff I'm looking at. But at this time in the market, you don't really need it. I do want to point back out, though. The other thing is that you were talking about the same thing. The 100 SMA has turned from resistance that we saw back here July 18th all the way through July 27th, now turned to support. And it's given us
I see it riding
the last 7 or 8 days. So that's a pretty big one. The other thing I was going to point out on Ethereum, very similar to that, is Ethereum's got to break through the 100-day MA. So that's sitting right at that 1710. In fact, right now it's at 1709. So that's really what we got to break through. We break through that 100 MA, and I think we run on both of them. So
what's your red MA? Just curious.
Red's the 20.
So it's basically getting squeezed up right now between the 20 and the 100, and which of the price is going to be important here.
And as you know, the longer term one usually wins. The bigger the number, it usually wins.
This is interesting because this market, in relation to how a lot of the stocks that you're looking, or a lot of the coins that you're looking at, and just kind of broke down, were similar to what the Qs and SPY looked like before this recent pump up. And
we were looking. I mean, if you put QQQ over Bitcoin,
and just overlay it.
Yeah. I mean, it gets pretty damn close.
Yeah, I mean, look at how it's humping up and starting to move.
Yeah, the difference basically was the two macro events that hit crypto that didn't hit the stock market.
Right.
This was UST and Luna, and then this was Celsius and Three Arrows. But if you take those out of it, we are going pretty much in lockstep with QQQ. So that's another one. I will say too, what I had not really noticed is, I mean, I know that that obviously the Bitcoin mining ones do tend to go up and down based on the price of Bitcoin. But another one that really surprised me on how close it is again, look at Riot versus Bitcoin. I mean, you go back here starting in November, and it's following the same exact pattern.
Absolutely, a million percent.
Price level. I mean,
that makes a lot of sense. I mean,
it does, because that's what they make their money is. The only thing that they make money on is mining Bitcoin. So, that's where their profits come in. But I never realized it was that close of a correlation before. I knew it followed. Usually, because what I normally noticed is that when Bitcoin starts to move up, it just sends the Bitcoin mining companies sort of into, bull mode. I never noticed that it followed it pretty much, though, exactly to this step.
Well, you know what, Howard, I got to say one thing. You sound good and like you're fully recovered from COVID. Last week was a rough one for me at the show. I'm feeling 100% now. The psyche is a lot better because I'm testing negative and I'm all pumped about that. I'm like, yeah, I could go out now. I actually ran an errand before here. Got stuck on a train, but that's what I'm saying. It's like, nah, you finally get out of the house and, still act normal, I guess, be normal. But that being said, I'm still walking around with a mask just in case. There's a stock in the news, and this is kind of what I want to finish off with. There's a stock in the news that's been so dynamic and insane, and everybody's trying to make sense of it. but in the end game, it really just became an extreme low flow pumper to the likes that I don't think I have ever seen. I've seen, certain things, certain names like LFIN back in the day on the original first Bitcoin pump in 2018. I've seen pumps like that and then they come crashing down, but I've never seen it to this scale. And this HKD. This HKD, for those that didn't know, I think peaked out up over 30,000% in a week.
Yeah, $2,500, right? Didn't it hit 25?
Yeah, almost 2,600.
That's
Nuts.
insane.
I mean, what did they finish today? I told the room yesterday too. I'm like, look, this thing's going to start halting down and it's going to drop. Yeah, so it crashed yesterday. Now it's at $1,100, and I actually think there's going to be one more swoon. I don't know if it's at the 1,000 mark. It's usually somewhere around. I'm thinking somewhere around $700-800, and I think it's going to make one last pop. And I'm only bringing this up to say to you folks, don't get trapped.
Yeah.
You're going to get caught in this thing if you decide to buy and hold it. Okay. And it's not going to be of no fault of your own. At some point, it's just going to randomly halt. The exchange is going to randomly halt it. And it's either going to be brought on by the SEC or the exchange itself. And they're going to open an investigation. And I only bring this up because the example is LFIN. I think LFIN was pumping. It went from $11 to around $280 in 2 days. And then they actually halted this thing. And then people were caught up at that entry price at those highs. And it opened at like $6 or something like that and never recovered. Now it's like a OTC sub penny stock. It's like point. It's like it looks like a safe moon coin, like.
What does AMTD even do? What does HKD do?
They're a Chinese fintech name. And all of a sudden, like yesterday and today, my penny room has been bonkers. My halt resume list is like smoking because there's been like 20 different tickers that have pumped up. HKD actually has another ticker out there, or it was like HKD
AMTD, yeah.
Yeah, that opened from 2 to 12 the following day after HKD pump. And then it dropped. I think AMTD is at $4 or $5 now. Let me take a look. And I mean, like they're $6, right? 6.25. And I mean, we saw QNRX today. QNRX up 360%. Moho coming from life. There's names like BQ and DUO, Duo. Let me see. I got all these names written down. NDCH, which got halted 3 times. MTC, which got halted a few times. UTME pumped. MHUA pumped. PTZ, which is a notorious pumper. DOGZ and notorious pumper. What do they have in common? They're these shit Chinese penny coins that tend to pump up a lot. And what I actually found out, Howard, did you ever hear of a stock called EBON?
EBON?
Yeah. So EBON is a quote unquote Chinese crypto exchange. Okay. I don't know what else they did, but they kind of pivoted and went, well, we're going to get into crypto. And then the Chinese crackdown happened, right?
Right.
So the underwriters for EBON, which was a notorious pump name during the crazy run-up of crypto a couple of years ago, is the same underwriters for HKD, which also apparently are the same underwriters for a few other shady projects and pump names. And
I told you, there's one supposedly coming out Friday, MGEL, if I get it right.
Yeah. So we're going to watch that. But there's a lot of stories about what's going on with HKD. Right?
Could you explain? I read about that. I don't know if you know about that whole underwriters. So those underwriters had the right to buy the stock at like $8.
So in theory, there's 2 stories that's floating around. Ownership of the underwriters that are constricting the stock and pumping the stock artificially.
Right. They're not exercising their options yet to buy.
Right. And it's also the same with issuance, where supposedly some of these brokers were supposed to issue shares that it wasn't available, right? And so it became like a GME, prospect where they had to buy back the shares to close out these short positions. Now, the latter doesn't make much sense what really does make sense is a purported pump by the underwriters because of their past history in doing business kind of in that same mode. Now, for those that don't understand what low float means, it means that there's a very limited amount of shares available to trade. So it does two things. One, when demand amps up, there's not much liquidity. And when demand is high, people are just willing to pay a premium price and the stock starts launching because there's no one's going to be able to come in with 100,000 lot on the offer and, just throw it on the books to shut down the market, right?
Right.
It just doesn't.
There's no market makers yet either.
Right. And number two, in that respect,
there's no options. There's no.
Well, and number two is that it makes borrows extremely hard, which is what you have to do to short. So at one point when HKD started ramping up, like it was shortly after, the borrow fees started getting crazy. It was like 1,000% plus additional fees. So it didn't make financial sense to short the stock. And in turn, it got so out of control, HKD in a 2-day period went from $278 to $25.55.
Yeah, the volume is 1.1 million shares.
Yeah, I think,
and they don't even have, how many shares do they have outstanding?
It's something. I've heard reports of 280,000 to like 3 million.
Right,
the 3 million mark is extremely low as is. But yesterday when it pumped, it only traded 300,000 shares. Do you know why, Howard? Because nobody had the balls to trade 100 shares because the spread was like $5 to $10 at times. And then when it got really crazy, the spread became $200. So like the bid was like 2,000 and the offer is at 2,200. So if you went market and got filled at 2,200, you'd instantly be down $200 a share.
10%.
So when you're watching the tape, it's just a bunch of one lots trading. People are just like, I can make a couple $100 trading one share. Why don't I do it? It's like a game of options, so to speak. So this is I'm just saying it's gonna pump again. Don't get suckered in, right? I'm not saying you can't day trade it, you can't scalp it.
Yeah, get that trailing stop in there. Get that trailing.
I mean,
stop.
even then, just
crypto doesn't have that, man. We gotta figure out a crypto.
They have rug pulls. That's the only difference. They don't halt and then open $2,000 lower.
No, we don't have that.
They pull the rug.
I started looking because finally KuCoin got OCO orders. Which for those that don't know is one cancels the other. So it means when I put out my signal to the group, I can say, hey, we're buying Bitcoin at 23,350, put a stop loss at 2,300, and our first profit target's at 24. And they can enter all that at one time and not have to manage the trade much. And that just got onto KuCoin. But I was mad because we had some really good trades going that I ended up getting stopped out on and losing a little bit of profit because it happens overnight in crypto. You can only watch it 20 hours a day. I can't watch all 24.
I mean, come on, Howard, don't be a slacker.
and but if you had a trailing stop, I wouldn't have had that situation. So I got to talk to my boy Sam Bankman-Fried and say, come on, man, we need trailing stops. Let's go, buddy. That's because he's trying to take all my money. They know that I take all their money.
Might as well just ask him for 100 million. It's not like he won't.
That's
have
nothing for him. Nothing for him.
All right, Howard. This has been a pretty active podcast. I thought it was a great one, man. You brought some great insights, my man.
Hey, thanks. I'm getting on that Netflix short tomorrow. I saw you guys talking about it. I missed out, and I didn't realize it was still in range. So I'm definitely looking at that tomorrow.
Hey, just follow up with me in the morning. We'll talk about it. Ladies and gentlemen, if you loved what you hear, do me a favor, like, comment, and subscribe. But the best thing you could do is share. Share these ideas. We're giving you trade ideas. This is an opportunity for you to potentially make money. Now, there is a disclosure involved, okay? I'm not going to be there to monitor it. This is at your discretion. You got to listen to what we had said, tune to tune. Where would your stop out levels be? Well, it's pretty simple. If it doesn't bounce off the levels that we're anticipating, there's no reason to be in. That's the whole rhyme and reason. That's the theoretical idea. It's in correlation, obviously, with the markets going up. Hopefully, compliance doesn't shut us down. But if it does, well, oh well, we tried. Ladies and gentlemen, like I said, like, comment, and subscribe for the great Howard Greenberg. I almost said Howard Crypto Crew. Oh man, Crypto Hondo, man. I love you so much. Listen, Disciple of Trend, give us a shout out on Twitter. We'll put our socials below. Peace and love, everybody.
See you guys next week. Thank you, everybody.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.